In this video, I'm going to show you exactly how to make about $200 or $300 on every trade that you see here based off of the roadmap zones. It's not that complicated. It uses price action, and I'm going to show you how it's done. Hello everyone. Today is June 3rd, first day of June. Daytradetowin.com is where we're at, trading price action. Before we begin, remember that trading is risky. Please don't trade with funds you cannot afford to lose. There are risks involved with trading. So you can see here on the chart that we're using a roadmap software exclusively by Daytradetowin.com. The exact entry price is 53.11 quarter. Now the reason and how this works is that these zones are very important. As the market goes up or down to these zones, it's either going to reverse off the zones, which provides a signal, software provides a signal to go short, or if it breaks through the zone, then we have an opportunity to go long in this case because it went through the zone into the same direction. So the reason for this trade, good for 4 or 5 points. So that's equivalent to about $250 conservatively on a trade like this, depending on how much volatility there is. Now, the stronger the market, great, we can take more profit. The slower the market, always have a smaller stop and a smaller target. We use the ATR, the average true range, to tell us whether the market is strong or whether the market is slow. So in this case, the market went up, landed in the zone. Now the rule for using this type of price action software is to wait for 2 consecutive candles unable to break through the zone, and then we see it reverse. That's the exact reason why we have that arrow to go short, and we have a signal there at that price at about 9:26 in the morning to go short. Now you have to be careful when the market opens, but now we see the market come back up into the zone and reverse off the zone. I say this is another great opportunity to go short. First, the market landed in the zone, so we can call that good resistance. And it didn't go through the zone, which is really important. So we have an opportunity here to go short. Again, depending on the volatility, I would say good for 3-4 points. And you have to have a stop that is just outside of the zone, or we call it a pivotal stop. So this is all taught in class. We have a live training that's included with the roadmap or the trade scalper. So in this case, great opportunity to go short. Again, landed in the zone, stopped, didn't go through it, reversed off the zone, and now it's coming back down. So visually, we can see what's happening. It gives us an opportunity. We're using price action to dictate how we treat the markets. Now, as the market starts to go down, we have here a trade scalper signal, 53.0750. Again, you're going short, leading me down to the zone. Great trade scalper signal, great trade scalper trade. And now I want to be short, but I don't want to see the market reverse. I want to see it either go through the zone so I can continue my short position, or if it starts to reverse, I can then go long. So what just happened? The market broke through the zone. Even by that wick that you see there below 53.02, the market broke the zone. You know what that tells me? We're going lower. As long as the market breaks the zones, we have these opportunities to continue in the same direction. So what we're seeing here is an opportunity to go short. Those traders that are in the live trading room also have the same software. We're all going and looking at the same signals. It's a great trading room, a great opportunity here to go short. And now it lands in the next zone, broke the zone. I say go short, keep on going short. And this is a great move. Now let's take a look at another example. This is at about 10:16, 10:15 in the morning, about half hour after the last signal. Market slowed down a little bit. It's normal. The market does slow down after the open. And now what do we have happening? Well, it landed in the zone, as you could see, coming from below. It got stuck in the zone, very important, and now it's turning around. This is exactly what I want to be as a trader. I want to see it. There's the signal to go short, the roadmap short, and now I can go short this market. The stop should be just above the highest high or just outside of the zone, so you're protecting yourself. And now we want to see the market turn around and go down, and that's exactly what's happening. Those roadmap zones are spot on. They're based off manipulation. The way I like to describe it is when you are accumulating a position, you're adding 1, 2, 3, 4 contracts to your position, and now it's time to take a profit. You're not going to get out the same way. Most traders, especially institutional traders, they dump their position to take a profit. And so that's what's happening. The market lands in the zone, they take their profit, they dump, and we need to know where this occurs, at what price, at what time, and we take advantage of it. So 53.0375, 2 points, 3 points, great trade. Market already moved to 53.01, so that's a good 3-point move. And now if you're still holding on to this position and it begins to break higher, that's your goal to get out of the trade and consider the short position no longer valid. We're still holding on. It hasn't broken through the zone. You can see that wick there is still at the top of the roadmap zone. So for all intent purposes, we should be short until it goes higher and breaks that high. Now, if it does break through the zone A up, that's a long trade. We're going to go long. And now we're going to take that for, again, 2-3 points, depending on the volatility, depending on the ATR. That's how we look at trading price action. There's no complicated moving averages or MACDs or Bollinger Bands or Keltner channels or RSI. We're not using anything but how the candles are reacting around the zones with rules, and then we have our to-do list. Is the market too volatile? Is the market too slow? What's my target? What's my stop? How long have we been in this trade? Great idea for a time-based stop. You should never hold on to a losing trade for too long. If you're in a trade, it's not going in your favor, after 10, 15 minutes, depending on if you're using a 1-minute chart or 5-minute chart, get out of the trade. There's no reason to hold on to a losing position. All right, the zone held. The market did not go through the zone. Great resistance, which you saw there from the beginning. The market went into the zone, and now it's coming off the zone. Another short trade here. This is actually a trade scalper signal to go short. The trade scalper is a great product. A lot of funded traders with Apex are using the trade scalper and roadmap combination. We include both the roadmap and the software and the autopilot, all with accelerated mentorship. So if you're interested in getting the trade scalper, the roadmap, the autopilot, the at the open, the Atlas line, all in one discounted package, the mentorship program is the right course for you. Now you can see that the market landed in the zone just by that little wick there. Now, before you decide to buy the market, right? So this is very important. We have to make sure that it doesn't go through the zone, which it just did. So obviously that's not going to be a long position. This is all short. It went through the zone. If it goes through the next zone, it's another short opportunity. You can actually have a stop there if you wanted to, a stop order to go short right below that lowest zone, which is about 52.9150, right? So if it goes through 52.9150, you can absolutely go short. There's nothing wrong with that. It'll be a stop or a stop with a limit. The difference between a stop and a stop with a limit is the slippage. So it hasn't gone through the zone yet. There's actually a long signal. Remember, the zone is holding. So if the market lands in the zone and it starts to reverse off the zone, we have a long signal. If it goes and continues back down or through the zone to the short side, again, that would be a short position. So what happened? Market went down to the zone, held. We have 1, 2, 3, 4 bars there that are holding support. In this case, it's support, not resistance, and it's reversing. Any trade now long is good to go. We have the validation, landed in the roadmap, did not go through it like it did previously. This is now a long opportunity as it goes up to the next zone. It's very simple. Again, the zones, we start off with the roadmap zones. We start off with price action. We then say to ourselves, the target and the stop. Are we entering? Is it too far away? And then we manage the trade with a time-based element, time-based stop. And we also manage the trade based on how the volatility, if it's too strong, if it's too slow, those are the targets. Okay, landed in the zone, bounced off the zone. I'm still thinking about going short. If it breaks the zone, and it may break the zone. And if it does, I believe that this would be a great shorting opportunity, but not yet. Patience is key. One of the 4 pillars of trading is patience. We have a trade scalper short, so that's good, and it broke the zone. So anyone who is with the roadmap or with the trade scalper, you're going short. This is a short position. Great. $300 instantly on a trade like this. If it continues to go lower, it's another short position. Let's see if we get another short position here. Okay, it broke the zone, short again. And that's how it's done. If anyone has any questions on using the roadmap or the trade scalper, please ask those questions in the live trading room. Remember, this is a short, right? It broke the zone. This is a short. I will see everyone in the next trading class. Until next time, good trading. All right, and there it goes. All right, if you like this video, subscribe to the Day Trade to Win YouTube channel. We have hundreds and hundreds of videos for you to learn how to day trade using price action. We also have a free member account. So if you're interested in learning, you can visit Daytrade to Win, get a free member account, download the trading software, NinjaTrader or TradingView will help you get set up, and you'll be on your way. Until next time.